Hello, everybody, and welcome back to the Traders Mind Chat live show. I'm Mike, and this is Stu, and we've got some trades to talk about today with you. We've got some live trading, open trades, focus lists, stocks that are in the neighborhood, and Stu, what trades do you have on the radar? Do you have anything that you're actively trading right now, or how are things on your side?
One position that I'm currently in, which is land, LAND.
Land. You're still in land.
Still there,
Yeah,
yeah.
we were talking about that one last week. Yeah, so that's great. So just popping open my screen here, or if you'd like to share your screen, if that makes things easier for
No,
everybody.
it's okay. Can you do it on your screen? Yeah, so that's fine.
All right, so land. Remind us. Well, where did you get into this? I think.
So
Yeah. Oh, we still have the markups. Is it this, right?
yeah, that's right. Yeah, down there. And I took a scale out on that one at 35.70, and then currently just riding it up. My stop sitting at 33.60.
And the stop right now is 33. So like we're right below, where that second one is. So if we color this in red, let's say, so that's a backstop. So, and that's where you hit your first scale out too, right?
No, I hit my first scale out much higher up. $35.70.
Oh yes, that's right. So I remember this one now. So this is the one where it just ran so much on money, and then as it followed through on Tuesday, that's when you started to scale out up here, and it was like
yeah, that was Friday's candle. Yeah, so I entered it on Thursday, Friday scaled out, up there, took a third off, moved my stop up, and it's just flopping about. So as you see.
Yeah, that's a fantastic one so far. Like you just love it when it blasts right out of the gate like this, right? So so for everybody that's joining too, right? And as we're going along, as Stu and I are going along, like please put your questions into the chat, and while you're at it, also make sure that you subscribe to the channel and hit the notification bell, so that way whenever we go live, YouTube or wherever you're watching will send you an alert that, hey, we're going live. But over here, right? So you this breaks out. You take your scale out, or your scale out up here. You raise your stop to this level, and so describe to us, well, why this level right here, where we have the red line.
It just, well, it's kind of just almost touching the 10 period moving average now. When I moved it up, it was a little bit above that, but I saw that big candle.
This one here.
And I thought, well, I'll just park my stop underneath the previous level where there was some minor support. And it's locking in enough of my gains that I'm not going to be disappointed if my backstop gets clipped. But it's also given the chance of fair trade at breathing. It's about 6% decline from where it ended up. So I thought, yeah, I'll leave it there, give it that chance to move around. It may well still come back down and get hit. It's not quite yet. I mean, on the intraday charts, and it's posting a series of higher lows now, following the 50 period moving average up on the 30-minute chart. So I think it's fairly safe for now.
Yeah, it's at least at a spot where if it breaks below that level, it's starting to show a trend change.
Yeah, absolutely. Yeah.
right? And I think that that's an important thing too. Like so often, like like stops will be moved up a little too aggressively, and I think the part of the purpose of a stop is to, of course, protect our capital, whether it's to protect our initial capital when we're setting it, or as we're progressing in the trade and we're protecting our profits. But if we move the stop up too aggressively, then we end up choking off the trade. And so there's a variety of ways that we can exit a trade. A stop just being one of them. Um, there's a trade from I think it was from last week that we could get into in a little bit. That was started either last week or the week before and was exited last week. And um, I had exited that trade based on danger signals,
Yep.
and so like that's another way to exit a trade is by danger signals. Everybody familiar with what danger signals are and what that means? Type into the chat. But it's actually a brilliant term that I heard you mention it first, Stu.
Yeah.
Danger signal, but like most people, like in most books, like famous traders that I've learned from, have considered mentors and have studied from for decades, have always called it as sell signals, right? Now,
Yeah.
I think that tweaking the word to danger signal, like helps to not prompt immediate emotional response or action in the trade, or at
Yeah.
least that's part of what I found when I started to switch the wording. Um, Danger means that like you're getting closer to where like you would be prompted to act, but if you see like several sell signals, to me that's prompting more of like okay, like oh, here's one sell signal, here's two sell signals. Crap, I better take an immediate action versus like seeing like okay, like there's one or two danger signals, let's see like how many we could get before it prompts an action. I don't know, like it's just something that struck me the other day that you had mentioned, and I thought it was brilliant.
Well, I use it to just a few that I use that are pertinent to myself, but I use it really to start looking at um, either getting ready to take an additional scale out or to move some of those backstops up and just start reassessing my levels and having a look at that trade. So how can I get the most out of this? It's it's as you say, some of those danger signs are there. So let's start taking a tightening up a little bit because quite often I'll leave my stop way down at break even and just let the trade do its thing. So it kind of gives me a signal to start moving up because certainly my trading I only take three exits really. So two scale outs and one backstop. So that's how I get out.
Hmm.
Um, and the danger signs kind of allow me to move that backstop up essentially. So that's where I am. Sorry, I've got my dogs barking in the background.
Yeah, dogs are barking in the market too.
They agree.
Um, yeah, it would be a shame to let like a 5R trade come all the way back to break even. Like I used to do that trick all the time in the early days.
We all have. Yeah.
It's not a great trick. It's better to definitely lock in gains and keep those profits. Were there any other trades that you have open uh, right now? Or
No other open ones. I had a few on my watch list, but they all got destroyed yesterday, really. So,
all right, well, we'll get into that. So two trades that I want to mention. So the one that I was talking about a little bit before was ERF, and so with ERF, that was the one from last week where I entered over here on the 25th. So that's like 2 weeks ago, and I ended up taking two scale outs. So the way that I like to scale out of trades, like I'll take off uh, a little bit when I've made one times my risk. I'll take off uh, the half of the original position at the second when I've made two times my risk. So by the time that I've made two times my risk, I'm out of half of the original position, and that gives me the flexibility to let the rest ride and not be emotionally attached to. Okay, I'm up here. I'm up 19%, and then I'm up only 1%. Right, like because I've already taken that profit off the table, it gives me the flexibility to maneuver in here. So what I ended up doing with this trade, and I'm managing the trade, and I'm looking at the trade each day to see how many danger signals are there, um, if there's any danger signals, and if there's a large enough number of them, then I'll start to unravel the position. So I hit my second scale out. Believe it was on this day here. Let's just pull this back a little bit. No, it would have been on this first bar here. This one where I've got my cursor. Right, so it's up there, and then price closes near the low of the day, right? So just closing relatively low in the range like that, like I'm treating that as like one danger signal, a minor one, but there's so many that I've thought of, like yeah, like well, what types of things show weakness that I actually have a list of about 33, I think 33 altogether, and it sounds like a lot. And yeah. To be honest, like when I started with this a long time ago, like it kind of was, and it felt daunting in that way. But um, when I have this list written out now, part of what I've switched to do is to start to think through what types of danger signals might arrive uh, today, and I'll think through that before the market opens, or like earlier in the day, so that way I'm not caught off guard with half a dozen positions and needing to go through this monster list. So on this day, right, just to fast forward to now, on this day, there were seven danger signals on this day. Seven danger signals. And I'm gonna pop open my list uh, so that way I could share with you what those danger signals actually were. So just grabbing the playbook from this week. And this playbook, this spreadsheet has all of my notes and journal and everything in it. This is something that I publicly share with our members. But I'm glad to share it with you guys here on the live stream as well. So this is the danger signals, and let me make this a bit bigger, so that way you could read this over here. All right, so seven danger signals. Price closes near the daily low. Actually, let me show you the chart and then point out the different danger signals that way. That's probably a smarter way to do it. So, danger signal number one, price closes near the daily low on that day. Number two, price closes below the 5 and the 10-day exponential moving averages. So, it's starting to show a loss of momentum on that. Number three, the fast stochastic is crossing below the slow stochastic. So another sign of a loss of momentum. Number four, both the fast and the slow stochastic are curving down. So another sign that it's losing momentum. And the reason why all this is important, right? Not to where like we have so many different people logging in from all over the place to watch this. It's not that these are should be signals that are should be widely adopted by everybody. It's that these are the types of signals that fit my particular style of trading. And if you've seen any of our live streams before, then you know that my style of trading is momentum based, growth based, swing trading. So I want to be in and I want to be out. And my average holding period is only going to be about two, uh, yeah, about 20 days, right? So about 4 weeks. So anyway, back to the danger signals. Um, it crossed below the 1.5 ATR. So I've got this uh, indicator here that I've adjusted to show the average true range and I multiply it by 1.5 because I want to be within the range of the average true range, but to just give it a little bit of width. And on this day here, it triggered as well. Let's see what else. The 5 EMA started to curve down. The 10 EMA started to flatten out, and those were the 7 danger signals on that day. So part of telling you all this is that it's never just one danger signal to get you out of a trade, right? Like if it or well, shouldn't say it's never one. Like I guess it depends on the one if it's stopping you out. Uh, but generally speaking, it, the more that you stack in a certain direction, the more it's going to weigh on a decision. It's almost as if you see like one of those scales, right? Like uh, I downloaded a picture the other day because I was going to put this into uh, my upcoming book. But if you ever see one of these, right, and you start putting a whole bunch of stuff on one side of the scale to sell, and you don't really have that much on the other side to hold, then that's the thing that's going to tip you into making that decision. And that's what happened to me on Earth on Friday. And well, it worked out because my stop was just below over here, sold early to lock in uh, about 1.5 R on the trade overall, versus trying to play it out for something bigger and only ending up with maybe about half an R overall in the trade. So hopefully you guys followed along. I realize that was a lot. uh, of course, like ask questions. I want to see engagement. You guys over there on Share Vision, I see a lot more people hopping on. Welcome everybody. Let me know you're alive. Type into the chat. Let us know, Stu and I, and you guys over here on YouTube and Facebook. Type into the chat. Let us know you're alive. So there was this trade, and then there was this one here, MATX. Both of them, by the way, we have a free newsletter that we're giving out, um, and I'll put the banner up so that way you could go hop on. So it's real simple. It's just marinwealth.com/newsletter. And one of the things that we're doing in the newsletter is uh, I'm sharing one of these ideas each week with people on the newsletter. Like it's not just meant to be like, oh, like here's a free stock pick. Like it's showing like exactly where I'm getting in, where like, or it's sharing the plan of entry, stop loss, target, and the rationale. Just so happens that the past 3 weeks have all been winners. So that's nice. So there was Earth, there was Tractor Supply Co. that gave like a 5% gain, and then this jumped mightily yesterday, and produced a 2R gain up to, yeah, the high water mark was about 9%. And so far, yeah, it hit the first scale out, second scale out. It hit the first scale out. So it triggered the entry and hit the first scale out in about 2 minutes of trading. That's ideal. That doesn't happen all the time, but that's what happened on that trade. And then um, later in the day, it hit the second scale out. So at this point, I'm continuing to hold. My stop loss is just below the low of this bar here, and uh, continuing each day to look to see how many danger signals are there, if any, and if I do get prompted with a number of danger signals, then I'll uh, exit the trade. If not, then I'm basically free rolling it from here. Um, let's talk about some trades that are on the radar. Stu, you mentioned that you had a few on the radar, but they got smashed.
Yeah, yesterday's action took. I think my watch list. I decimated them. Um, Yesterday, there's not much left. I'm just having a quick look now. Vivo, I think, is still possibly in play. It's just kind of surfing along that 21 period moving average. But it's nice and tight. Decline in volume and range decline there.
Mm-hmm.
The short-term moving average, the 10 and 21, have kind of flattened out, starting to wiggle about, showing a series of higher lows. You could maybe possibly look for a break of that downtrend line that if you drew one, a
Yeah, put
possible
that back.
decent entry spot. Yeah. Um, we'll see how that one goes during the week. Um,
Get rid of it.
I don't know if there's much else left, really. The only other one I'm watching is PayPal. Really, is probably the only one that's still. I'm still having a look at. I'm looking
Yeah.
at that either both long or short, but I'm expecting it to potentially pick up and go back to the kind of next sort of major support, which is about 125. So possibility of a 25% move on that. We'll watch it and see, but it's nice and tight down there.
So
So
it's tightening up, and so
yeah,
let's zoom back over here. Oh yeah, because so
you get two major supports, one at 125 and the other is 95. So it's kind of setting up a range in there. So they're approximate zones, if you like.
yeah, so somewhere right in that area where I drew that little channel, going
Yeah,
all the way back here to 2018. Well, was resistance, broke through that, ended up being support, and then yeah, like support and resistance is kind of a range, so around that area, and it's just revisiting it again.
yeah. And then if you same with 125, you see that, and it's played between those ranges before in the past. So that's just one I'm looking at.
So around 125, let's set that up. Yeah, right around back here.
Yep.
That's quite interesting. Yeah, and it does seem that it found a little bit of support the first test,
Yeah.
and then over
Tested it a few
here, and it's
times.
flattening out. Yeah, it's an interesting idea.
So it's very liquid stock, and it moves nicely. So yeah. Even if you're wrong, you're not going to lose your shirt on it. I don't think.
Mhm.
And that's
Yeah,
about it for me. Yeah. This
what
week,
was that?
fun pickings, Mike. This week. for me.
Yeah, pretty much. Um, so one of the things, well, with all these lists, right? Like often, if it's not, if the market isn't conducive to your strategy, right? So like if you're like, let's say that you have a strategy that trades long only and you're in a bear market, then it's not the ideal market environment for your style of trading. A lot of people will just throw their hands up in the air and say, like, why bother even screening at all? One of the things that a watch list helps us do is to it provides like an extra feel for how the market actually is, right? So I'm not just looking at the major indexes and waiting to for them to tell me when the market is back into an uptrend. I'm looking at the stocks on my watch list to see how they're behaving and to see how many setups there are, what quality of setups there are, what sectors and groups happen to be setting up, and how does the market treat them. And like, so if 90% of the stocks on my watch list end up breaking out of solid patterns, then hey, then that means that it's a great market environment. If the market smacks everything on my watch list, then I know that there's a pretty good shot that if I put my hand in the jar, I'm going to get bit, right? Rather than pull out a cookie. Like I want to be able to pull out more cookies or something good. And for the most part, yes, really, aside from MATX this week, like most things have gotten uh, beat up a little bit. And so even if there's, well, like I like to keep trades on the watch list that are just simply consolidating. That there's most of them on here are not stocks that I would, or not setups that I would take, because I've assessed the quality of them and they're just flawed, or and in an environment like what we're in, right? Like, so if we're looking at major indexes, and we'll do a full market analysis on Thursday, but if we're in a market environment where you see something like this, and let me take the annotations off so it's less noise. But if you see something like this and overall the market's trending down, but over here you see some spikes higher like this, and you're seeing volatility and you're beginning to move sideways short term, it's the kind of environment that tends to be very choppy. So when you're in a choppy environment, it's generally more challenging to find high quality trades. Um, so when you do start to find high quality trades, it will often happen before the market finally does turn and start to resume an uptrend. And that's when you can make some real money on that turn. And that's why we want to still, like, we don't need to be in the market all the time, but we should be aware of the market almost all the time. Like if you want to go on vacation, go on vacation. Like, don't let that stop you. But we do want to keep an awareness. Like back here, for example, like this was my best period in 2021, from the stretch from early October. Like I started getting long back here to about mid or the end of November, and it was because stocks started showing up. Like in real time, the market looks terrible here, but stocks started showing up. So I start getting long and I'm not getting stopped out and there's not too many danger signals. So great, hold on. More stocks keep on showing up, keep on adding. And then before you know it, you've had a great run. But if you're not dialed into your process, then uh, that's how you end up here and starting to have that fear of missing out. And then if you're not dialed in and you start to see an update over here or over there, and maybe you go on social media or something, and you see somebody posting about, oh, like I just had this great gain, that then that's something else that might trigger fear and scrambling, and well, we don't want to do that. We want to be dialed into a process. I'll get off my soapbox now.
No, stay on it, Mike. Absolutely how you do it.
All right. So not too much setting up right now, but just continue to do the work. Not a whole lot in well, in the universe. I was gonna say in the neighborhood list. How about shorts? Did you see like it seems like shorts are taking a little bit of a breather here too. Like this. Whoops, I'm in the wrong.
Yeah, it's mostly sideways action, and most of the things I've been looking at anyway, Mike. Yeah,
Yeah, like this was kind of there as a short. Like it didn't really work out. Like this started to go. It yeah. It seems like we're firmly in the sideways choppy kind of zone.
yeah.
Uh,
We'll dust
any other
off our range trading techniques now.
anything popping up for shorts on your end? I didn't see much.
No, I don't. Yeah, there was a few potential candidates, but even they got struck off the other day. So, um, no, it's the thinnest I've seen the potential setups for quite a long time now. So there's normally been something either to the upside or to the short side. But yeah, it's pretty thin at the moment.
Yeah. Yeah, so stay active with your process, but you don't have to play every hand.
Absolutely,
All
cash is up.
right. All right. So uh, open it up to some Q&A. Um, let us know what questions you have. So far, the chat has been pretty quiet. So um, at least let us know that you're there, that you hear us, that this didn't just conk out and we're talking to ourselves. It's always fun to sit on here and chat, but we want to make sure that we're reaching everybody. Um, Another thing that I wanted to share again. Well, we shared it last time. Some people started to take us up on the software, well, which was pretty cool. So let me share this again. If you like the live streams, then you'll definitely love the Elite program because we're doing 4 hours of live group coaching. It's kind of similar to this, but we're doing it on Discord. And so all the microphones are open. So you'll be able to talk with Stu and I. And on Saturdays, what we're doing is there's 3 segments. So 3 hours on Saturday, 3 segments where we're doing a full market review. We're doing a trading lesson of the week. And then we're doing trade ideas and we're going through all these different ideas and we're picking them apart and everybody's discussing them. And we have that. Then on Wednesdays, we do a dedicated Ask Us Anything. So everybody hops on, any kind of trading questions at all. People hop on and we have an open dialogue. So if that interests you, shoot me an email at code@marawolf.net and we'll send you a special offer. Um, so looks like we've got a question pop in. Awesome. Scott, always here to help out with the Q&A and help break the ice. I appreciate you, Scott. Scott says, what are your thoughts on logging trades as scaling as let me see if I'm reading this right. What are your thoughts on logging trades as scaling as individual trades versus capturing an aggregated average entry and exit price? If you track each scale in and out as individual trades, won't affect the win loss and stuff like that. Yeah, excellent question, Scott. I appreciate that. Yeah, Stu, I'm curious to get your take on this as well. But my first thought is to not get bogged down in that. Like, so if you're it it sounds like you've already started, so I don't think that you're at this stage. But for the benefit of everybody else, like if you're if for those of us that are thinking like, oh, like how should I do this? How should I do that? And you're kind of like getting caught up in the nitty gritty. The most important thing is to just start. And well, what I found that has happened with my own journaling through the years is that it's gone through iteration after iteration after iteration, and like I'm still discovering like uh, what's best, right? Like, so there is no what's best. Like, I think that there's certain best practices, but the best practice of all is to build the consistency of actually doing it. Back to this, the way that I've handled it is to actually do that average gain, right? Like, so I'll take the average gain, have that be in the statistics for the trade. So like I have the net outcome of the trade in the statistics, and when I'm going to analyze the trade itself, then that's where all the notes come in. So I could see that, oh, I've entered here, I've added over here, I started to scale out this way and that way, and I have screenshots of the chart. So it's kind of marrying the best of both worlds. Um, Stu, well, what are your thoughts?
Yeah, I think I understand the question. I think if you're using commercial software to do that trade logging, then it's going to depend on the commercial software's capabilities. One I used to use in the past didn't have scale in, scale out, so you had to do that kind of aggregation piece, which I found was a bit of a pain
Mm,
because you're having to write copious notes of where your scale outs were and why and all that stuff. So I've started just using my own spreadsheet to log my trades now, where I do capture each individual scale out as an overall trade, so that it's easier. So a trade is a trade, and that trade will have a number of different exit points. But I just mark each of those individually, so they're just like little trades within the overall position. So
yeah, that's a fair point. I almost forgot about that. Yeah, like so different software, some will, some won't allow you to do those different scale outs, and that's actually one of the things that prompted me to drop the software and just go back to doing a spreadsheet because spreadsheet, yeah, like you need to learn a little bit of how to work with Excel or work with Google Sheets, but it's so much more flexible. You want to add something, you just add a column, and here's your new stats.
yeah, I think that's true. And most of the trade logging tools, if you like, or trade journaling tools that I've seen tend not to have multiple exits built into them. Whereas if you look at some of the portfolio management tools, then they generally do because most long-term holders have multiple exits and they're always adding to positions and taking stuff off. So it just depends on what software you're using, I think. But the alternative, as you say, is a very simple spreadsheet. If you normally take two scale outs, then an exit, then you've got three exit columns, price and three exit amounts. And the calculations are not that hard. So
Mhm.
that's how I do it nowadays.
Let me see what else Scott says. Essentially, tracking individual scales tracked as trades themselves start to get confusing when taking into account LIFO and FIFO methods.
Yeah. Yeah, so that probably relating back to the So the kind of portfolio management stuff, whether it's last in, first out, or first in, first out. So, yeah.
Yeah. Well, we actually had a conversation similar to this. I think Sal was the one that brought up. Stu, do you remember this? This conversation with I think it was with TD Ameritrade, Thinkorswim, and setting them up as FIFO or LIFO. You might be able to set it up with your broker, where they would be able to treat your position as last in, first out, or first in, first out, and make those adjustments. That might be helpful or something to look into as well.
Yeah. Yeah, I think most brokers do it in a standardized way, whichever it is for them.
Mm-hmm.
Yeah, I know
All right.
mine is certainly a FIFO broker, but that's what it is.
Mm. Do we have any other questions? Any other questions you guys have? We've got a few more people popping in over here on YouTube. Still waiting for some comments over here on ShareVision. Yeah, you guys just like to watch over there on ShareVision. Um, let's see. Thanks for answering my questions. Hopefully, others have some as well. Yeah. Well, again, if anybody would like to check out the Mara Elite program, again, you could email code@marawealth.net. We'll send you a special offer if you do. And also, if you're interested in the newsletter and have some educational information sent to you, have our schedule of events, and of course, the one free idea each week, hop on the free newsletter, marawealth.com/newsletter, and you'll start getting it this Sunday. Goes out every Sunday. All right, so I think we'll wrap things up here. Stu, always a pleasure.
Yeah, thank you, Mike.
Everybody that joined us live, appreciate you guys. Scott, thank you for all the excellent questions, and we will see you back here next time. Take care, everybody. Much love. Peace out.
Bye, everyone.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.